session of Visual JForex, we will be continuing our work with the indicator named Directional Movement Index (DX). So let us head to the Visual JForex board. In prior session, these blocks were added, and using this, the setup has been completed so far, where the instrument subscription has been done. The USD JPY is the instrument of choice this time around. The position amount was set at 0. Then I got these DX blocks of the hourly time frame, the get historical candle of hourly time period, and along with that the 10-second candles as well. Then to define the minimum and the maximum values for the actual price difference, to look at the price volatility, these two conditions have also been defined, the minimum and the maximum value of 15 and 45 pips respectively. And then to look at the actual price difference, this calculation was carried out, and as is the requirement for the algorithm to execute the trade, we want the last hour's dx value to be more than twice of the penultimate hour's dx value. So this calculation was done, and then looking at the actual price difference, actual price volatility, we have defined these stop loss and the take profit levels for the buy side. And here these conditions were set using the if else block, and finally the open at market. Now let us head to the JForex platform, where I will explain to you. This is the Euro USD chart, so I will change it to USD JPY, and this is the USD JPY chart of 15 minutes. Let's change it to hourly. Okay, and here I will briefly explain to you the logic behind the execution of the sale trade. So we want the last hour's DX value to be above 25, and it should have doubled or more than doubled the penultimate hour's DX value, and there should be good enough price momentum also. And whenever that happens, whenever we see that last hour DX value is more than double of prior hour's DX value, and also the price action is within the defined price band, we will be looking to initiate the sell trade. So this requirement is fairly simple, and equally simple to implement also. So now we start adding the additional blocks. First thing first we will have to do is look at the actual price difference, and this calculation won't be useful for defining the sell side, as we will need to invert these calculation. As this is the sell side, we want the last hour's closing value to be below the prior hour's opening value, and that means now to look at the price difference, we will have to deduct the candle close from candle 19 candle open. So for that I will take new calculation expression block, and also to define the stop loss and take profit, we are going to need two more calculation expression blocks. So I will take these three blocks straight away, and also open at market to define its parameters. Here we are going to need to create new variables using the integer data type, and then we will put those variables in these output values, as we have to pay attention to the data type while defining these parameters. Okay, now let us see the actual price difference while executing the sell trade. And in this case we are going to need candle 19's candle open and candle 18's candle close. Candle 19 has a look back period of 2 and candle 18 1. That means candle 18 is last hour's candle and the penultimate is candle 19. And this calculation is going to be A1 minus A2. Okay. And we will do, we will name it SAD, sell actual difference. Okay. Oh. I will join this below the BTP. And then whatever is the actual price difference, we simply have to multiply it with the pip conversion factor, which is 10 raised to the power 2. This is going to be A1 into A2 . I will create a new variable here. Oh. And this is going to be this is simply going to be twice of the stop loss. Alright, now here we had a variable with a value of 2. I think this is it, dxm. So we will multiply stop loss with the 2, a1 into a2. Okay, looks good. And I will join it back. Now let us start defining the conditions for the execution of the order. And we need last hour dx value to be more than twice of the prior hour's dx value. So we have to look at mdx, which is the value of dx, and it has been multiplied by 2. And we need first input to be greater than second input. Now we have to compare this difference with the minimum requirement and the maximum requirement. This should be greater than MPD. I will have to take a couple of if blocks. Okay, PD should be greater than PD, and it needs to be less than maximum permissible limit. MXP is 45, MPD is 15 pips, and this actual price difference should be within this price band. First input less than second input. Okay. And after that, we want to make sure that there is immediate selling momentum in last hour. So we want candle 18's closing value to be less than its opening value. First input less than second input. And then we are going to compare the 10-second candles, candle 20 and candle 21's closing level with candle 18's closing level. We want the order to be placed whenever price starts to drop below the last hour's candle close. So here in both these blocks we will need candle 18's candle close value and then compare it with candle 20 and candle 21. Candle 21 has a look back period of 2, and to define the condition its close should have been higher, and after that candle 20 goes on to close below this candle 18 candle close. Okay, first input less than second input. So with this we have defined these 6 important conditions which need to be in place for any trade to be initiated using this logic, and we will have to also make sure that the format is symmetrical. The conditions for the sell trade are symmetrical with the conditions which we had placed for execution of the buy trade. That indeed looks to be the case, as we had 6 blocks while defining the buy side requirements, and we have 6 blocks of if else while defining the sell side requirements. And trade flow is going to all the way till this block, and here this needs to be changed to sell. Default instrument will remain as it is. Trade amount I will change to 0.1 million. Slippage, I think slippage of 2 pips should be good enough. And stop loss and target price, we have already defined these variables, and this is going to be dependent on the price volatility. So whatever is the difference as we have calculated here, that will be taken into consideration automatically while defining these stop loss and take profit levels. So I hope you have been able to understand the logic behind this algorithm using the indicator dx, and you will be able to design and define it on your own. I hope that you will be able to do it fairly simple, fairly easily, and then to test its efficacy, you can run it on the historical tester on G Forex platform on historical data and see how it has performed in the past. Of course, past is no guide to the future, but you get the idea whether it is logically sound or not. So with that, the session is coming to an end. See you next time. Till then, goodbye.